Hi traders, welcome to another weekly Forex forecast on FX list, which is for 23rd to 27th of November year 2020. In this week, I'm going to share with you some list of currency pairs I have on my watch list next coming week should in case of trade breakout opportunity. And then if today's your first time view my YouTube channel, do not forget to click on the subscribe button as well. Hit on the notification bell so whenever I release educational content of this kind, you're gonna be the first to be notified. Also, remember, forex trading is an high risk investment as well and high rewarding investment. Therefore, do not trade more than the amount of money you cannot afford to lose, and then do not trade with a borrowed money. Here are the list of currency pairs I am watching out for next coming week. I have the British pound sterling paired against the USD. I have the euro paired against the USD. I have the USD paired against the Japanese yen. I have the USD paired against the Canadian dollar. I have the New Zealand paired against the USD. And then we're going to wrap up things with the XAU paired against the USD or the gold. So let's dive into the weekly Forex forecast right now. The first currency pairs on our watch list is the British pound sterling paired against the USD. Right on this chart, we can see right from the swing low right here, this currency pairs have been carving a bullish wave. We can see how the bulls had been dominating this trend right from midpoint of May and June 2020, and the price is finding it difficult to close above this key level structure, which actually is a resistance structure right here. Can see how it acted as a resistance for price. That was in late of August 2020. We can see how it acted as a resistance for price, and then the bears took over the trend into a bearish rally to the key level support, which acts at the price level of the 1.27225. And then since then, the bulls have been struggling to maintain a healthy bullish upward rally. And then right here we can figure out a transformation of a rising bullish channel right here. So what we need to do next week is to patiently wait to see how price is going to react to this dynamic resistance trend line right here. And then if price eventually have a breakthrough, then we need to pay close attention to the next resistance level, which acts at the price level of the 1.33875 to see how price react to this level. Maybe this is going to turn into a resistance, or maybe price is going to break through and then validate this structure right here as a new latest support level. Alternatively, next week, if the bear should step in whereby they pull price downward, then we have to pay a close attention to see how price react to this key level structure of the 1.30125. Likewise, the dynamic trend line support, which had been in play right from the midpoint of May, or that is the midpoint of May and June year 2020. So we have to see how price react to this level. And the failure for the bulls to defend this level right here, whereby the bears pull price downward, the bears have to ensure a strong bearish close below this level in order to figure out maybe the bears are willing to turn this rally right here into a bearish rally. And then before we can go actually for a bearish rally right here, we have to figure out this dynamic trend line right here. Likewise, the horizontal key level structure, which acts at the price level of the 1.30125, actually serve as a new potential resistance level. So next week, as a price action trader, pay close attention to the British pound sterling against the USD and figure out how price react to this level of the 1.33875. Likewise, if price is going to make a rotation downward, pay close attention to the key level structure of the 1.30125. So guys, I'm going to show you how price is reacting to this currency pairs based on the 4-hour chart frame. So if you are a short-term trader, you can actually look out for trade opportunity based on the 4-hour chart frame. So let's check the 4-hour chart frame. So here is the 4-hour chart frame of the British pound sterling paired against the USD. We can see our price transformed from this resistance structure of this our bullish rising channel based on the daily chart frame. You can see price made a bearish rotation to this level right there, and then right now we can figure out an ascending triangular formation right here. So next week, if the bulls fail to close above this level right here, and then if the bear steps in whereby they pull price below this dynamic trend line of this ascending triangle right here, then it means this ascending triangle has failed in its formation. So next week, pay close attention to the 4-hour chart frame to see maybe price gonna break through this minor resistance level right here in order to pull upward to the resistance of the trend line, or maybe the bears are gonna step in to pull price to break below this minor trend line, which acts on the 4-hour chart frame. And then if the bears can put price below this dynamic trend line right here, there is a high possibility for the bears to pull price downward to retest the key level support, which acts at the price level of the 1.30125. The next currency pairs on our watch list is the euro paired against the USD. We can see right from the formation of the symmetrical triangle right here, we got a strong bullish upward rally right to this level right here. So I'm gonna zoom in so you can figure out properly this chart. So this is a rising channel right from this level right here. We can see all this dynamic support trend line of this rising bullish channel right here acted as a continuous dynamic resistance right here, dynamic resistance, and then likewise right here, dynamic resistance, and then in conjunction with the minor level we got right here. So here is the minor level we got right here. You can see right here got a resistance, likewise right here a resistance, and then right here a resistance, likewise right there a resistance. So this is a very strong key level structure in conjunction with the dynamic trend line right there. We have to pay close attention to next coming week. So next week, if the boost should ensure a strong bullish close of bar above this dynamic trend line right there, they have to ensure a strong bullish bar above this key level structure, which acts at the price level of the 1.19621, which was actually a resistance level for price that was in September 2020. Likewise right here almost the midpoint of August and September 2020. So if the boost can ensure a daily close of bar above this level right there, then it's a signal of a bullish upward rally on this currency pairs. There's high possibility for the bullish upward rally to continue right here. Alternatively, if the bear step in right here, we need to figure out a strong bearish price action bar right here before we can anticipate for a bearish downward rally. Like we can figure out right here a bearish strong bar right there, that is a bearish pin bar. So next week, pay close attention to this key levels structure right here to see how price react. So and then I'm going to show you guys if you want to take this currency pairs based on the lower time frame. So let's check the 4-hour chart frame to see how price has been building up on this currency pairs. So here comes the 4-hour chart frame of the euro pair against the USD. We can see on this currency pairs, we can see how price had been building up a chart pattern right here. We can see the swing low right here. We can see the high low swings right here. So this is a narrow rising or wedge based on the 4-hour chart frame. So if the boost you failed to ensure a bullish close above this level next week in order to anticipate for the dynamic trend line right here, the bear step in, then this dynamic trend line right there, it's a good place to look out for shorting opportunity on the euro pair against the USD. So if you want to short right here, the next potential level whereby the bears have a high possibility to pull price to is the major key level support, which acts at the price level of the 1.16265. But before the bears can actually pull price downward to this level, they have a lot of pips to clear off, a lot of swings low, like example the minor swing low right here, likewise the swing low which acts at the price level of the intersection of the 1.17600 slash 1.1740. So I can simply apply a minor level right here in order to monitor this level based on the 4-hour chart frame. So this is what you should be looking out for on this currency pairs next coming week. The next currency pairs on our watch list is the USD paired against the Japanese yen. I already shared out a trading setup with the VIP members community of mine. That was on last week. That was a week spent. So right here we can see how this currency pair had been right from this level right here in the strong bearish downward rally right here. So and then if I should connect right from this level right here and this level right here, we can see this is a descending triangle right here. Okay, right from this level right here, we got a swing low high, likewise right here, low high right here, and then low high right here. So this descending triangular formation right here. We can tag this as a first breakout. Now price is coming again. Actually I sent out a trading setup based on the formation which occur right here, and then if you're in the VIP member section, you should your trade should be in profit at the moment. So this level right here, we can see our price has been treating this key level support, which acts at the price level of the 104.167. Acted as a support right here, as a support right here, as a support right here. We have price breaking out right here, and the price closing again right here as a false breakout. Price eventually ensure a strong bullish bar close, and then this dynamic resistance trend line is still active as a dynamic resistance trend line. We can see the strong bearish move right here. So At this level right here, the formation I can figure out right here, and then based to the rejection of bar right here, bearish pin bar right here does suggest a potential more bearish rally to come on the USD paired against the Japanese yen. So let's check the weekly chart frame as well, the monthly chart frame. So here comes the weekly chart frame. I'm gonna zoom in. You can see right on this pattern right here, we got a symmetrical triangle right here. And the last week we can see how this dynamic support trend line has been serving as a resistance level for price. You can see that, or triple time last week bar actually was being rejected by the dynamic structure right here, which I pointed out in my last weekly Forex forecast. So for as long this dynamic trend line right here is still resisting the bullish interest right here, there it's an indication the bears are active at this moment and then are willing to put price more downward on the currency pace of the USD paired against the Japanese yen. So let's check the monthly chart frame as well. So based on the monthly chart frame, we can see the pattern properly and where visible. We can see right here. So the month of November has a lot to say. If we can see a strong bearish move month of November, whereby the month of November eventually ensure a strong bearish close or month, there it's a signal the bearish rally on the USD is actually in play for a more bearish rally, and then this could lead this currency pairs into a multi-year bearish downward rally. So let's check back on the daily chart frame. So back on the daily chart frame, to get into this trade right here, the level right here is actually acting as a resistance level. Alternatively, next week, if the bullish should step in, whether be ensure a bullish close above this level of the 104.167, then this dynamic resistance trend line still have to repel the bullish rally right there back into a bearish rally. And then if this level failed to resist the boost right here, then don't be surprised if the boost eventually pull up price and they break through this level in order to anticipate for the resistance horizontal level, which acts at the price level of the 106.070. So next week, as a price action trader, pay close attention to this level right there to see how it reacts to price, and then the swing low, which acts at this first breakout of this bar right there. The next currency pairs on our watch list is the USD paired against the Canadian dollar. We can see right at this medium right here, our price carved a descending triangular formation, and then which led to the bearish rally we got right here. That was in right from midpoint of March and April 2020. You can see the swing high right here, downward rally, and then we can figure out another potential descending triangular formation right here. So if I should connect this level right here, you can see this is another descending triangular formation like we did got right here. So and then let's zoom in on this currency pairs right here. We can see the key level support, which acts at the price level of the 1.2995 was the support for price right here. That was in September, likewise here in November. And then we can see the minor key level swings right here. So next week, we need to pay close attention to see how price react to this major key level support, which acts at the price level of the 1.2995. Likewise, the dynamic resistance trend line here. So next week, if the bears can put price downward, whereby they ensure a strong bearish close below this level right here, it does suggest a potential more bearish movement on the USD paired against the Canadian dollar. And then alternatively, if the bulls can step in, whereby they put price to this level, the dynamic resistance trend line still have to act as a resistance level right here to reject price in a continuation bearish rally. Alternatively, if the bulls eventually ensure a bullish close above this level right here, don't be surprised the bulls are willing to retest the resistance structure, which acts at the price level of the 1.33887. This was a resistance for price here in November. Likewise, right here, ending of September year 2020, we can see right here as a support as well. So next week, pay close attention to this currency pair. So let's check out the 4-hour chart frame. So here is the 4-hour chart frame of the USD paired against the Canadian dollar, and then we can see the formation which is forming on the 4-hour chart frame. So we got a swing right here, low high swings right here. We got this swings level right here. We got another low high swings right here, or low high swings right here. Now price is trying to retest this dynamic trend line again, and then the minus level we got right here, which are the price level of the 1.3100. So next week, if the boost should eventually ensure a bullish close above this level right there, then don't be surprised if the boost takes over this rally into a more bullish rally. Alternatively, if the bear should step in, whereby they put price downward, there is signifies this dynamic resistance trend line right there is still active as a potential resistance trend line. So we have to pay close attention to see how price react to the level of the 1.29952. But what I can figure out right here now, we can see the frequent retest of this resistance trend line, which does signifies weakness in the dynamic resistance trend line. We can see the distance which it took the boost to retest right from this level right there. We can see the reduction in the distance right there, and then we can see the fast retest right there, which does signifies a potential bullish breakout right there. So next week, pay close attention to price at its level right here, and then this support level of the 1.2995. The next currency pairs on our watch list is the New Zealand paired against the USD. And then we can see how price has been reacting to this dynamic resistance trend line of this bullish rising channel right from this level right here. You can see the movement right here. So I discussed about this pattern formation at this level right here. I said I don't want to buy at this level. I simply don't want to get involved in a bullish trap right here. So I don't want a situation whereby buying right here, there would be a sharp bearish reversal, and this can be tagged as a trap, a bullish trap right here. So what we need to do is to pay a close attention to see how price react to this level. If price can transform right here, figure out a strong bullish price action bar right there, and then let's figure out what is actually happening based on the 4-hour chart frame of these currency pairs. So here comes the 4-hour chart frame of the New Zealand paired against the USD. And then we guys can figure out right here. You can see we got a rising narrow wedge right here, right from the swing low right here. We connected the swing low right here, swing high right here, swing high right here, and then swing high right here. Why this is the major key level resistance of this 0.69089 based on the daily chart frame. So next week, we need to pay close attention to this currency pair to figure out how price is gonna react to this level. If the bears successfully ensure a daily close below this level of the 0.69089, then it's a signal the bears are willing to retest the dynamic support trend line right there. So we have to look at how price react to this level of this dynamic support trend line. So if this dynamic support trend line failed to act as a dynamic support for price right there, then don't be surprised the bears are stepping in, and then this could be a signal and indication to a bearish rally into the next key level support, which acts at the price level of the 0.67715. Alternatively, if the boost should step in here next week, then it's a signal and the indication the boosts are willing to gather momentum in order to anticipate for a more bullish upward rally, in order to break out of this level, in order to continue the bullish upward rally right there for a more bullish trend. So next week, pay close attention to this currency pairs based on the 4-hour chart frame and the daily chart frame. So traders, it's time we wrap up our analysis with the XAU paired against the USD or the gold. But before I dive in straight into this analysis on the XAU paired against the USD, that is the gold, a student of mine, maybe a follower of mine on my Facebook page, asked me, sir, the way you constructed, your dynamic resistance trend line right from this level right here. Actually, the trader said, is this the best way to construct the dynamic resistance trend line? And then he shared with me the way he constructed its own dynamic resistance trend line. Actually, he connected is from this swing right here, from this rejection right here, and the downward right here. So he was asking me, is this construction of mine right here? And then I replying, yes, it is right. In trending analysis, trend line analysis, there's a different ways in which you can construct your trend lines in technical analysis. So if you construct your dynamic trend line right from this rejection, low swings right there, and a low high, that is a low high right there, that means you are tagging this zone right there as a false breakout, which is definitely right as well, right? And then if you are connecting your dynamic resistance trend line right from the swing high right here to the swing high right here, it means you are treating all this level right here under the influence of this dynamic measurement right here. That is trend line right here. So any of these two you construct, level you construct your trend line, they are all correct. So right here, I'm gonna, in order to serve all these traders who have connected their trend line at this level, so I'm gonna leave the trend line on this analysis this way, so everybody can understand it properly. So on the good right here, we can see from this level right here, we got price breaking out, and then this level of the price level of the 1,860.765 is still acting as a potential key level support for price of the gold. But what we can figure out right there is there's a reduction in bullish momentum. We can see from this level right here, we got a low high swings. We can see from this level right here, we got a low high swings, and from this level right here, we got a false bullish breakout, and then we got a massive bearish close of bar again. So what I can figure out technically on this chart is there's weakness in bullish momentum right there, and then there is a higher interest in the bearish side on this in this market right there. So I am still looking out for a bearish rally on the gold due to the fact of the pattern we got right here, multiple retests of this key level support right there. I'm still supporting a bearish bias on the gold. So what I need to do is, I love to trade the gold based on the higher time frame, that from the 4-hour chart frame to the daily chart frame. Majorly I focus my attention, my decision, my final conclusion based on the daily chart frame. So right from the daily chart frame right here, I'm gonna keep on monitoring the gold next week to see how price is gonna react to this level. So if I can figure out a strong bearish close below this level right there, then I'm gonna switch to the lower time frame like the 4-hour chart frame in order to look out for a bearish price action bar, in order to anticipate for a more bearish downward rally to the next key level support, which acts at the price level of the 1,793.80. Alternatively, next week, if the bulls should step in whereby they ensure a massive bullish close above this level right there, then I wouldn't still want to buy this or buy the gold, because this would actually signifies a market within the range. You can see right here, range market. If the bulls should step in right there, then it signifies trend within the range. It means the gold is not yet opened up in a well-defined technical pattern, but not until if gold can ensure a strong bullish close above this dynamic trend line of the swing high right here. There's a low high right here, likewise the high right here, before we can figure out maybe it's a next bullish wave for the gold. So guys, this is what I want to share with you in this weekly Forex forecast. And then if you haven't joined my free Forex trading webinar class, there's a link under this video. You can click on that link so you can become a member today. And then if you are looking out for a community whereby you can learn how to trade the Forex market, stocks, crypto, indices, energy, metal market, then there's a link under this video. You can click on that link so you can become a member of FS Labs VIP community today. And then if you are looking out for reliable Forex brokerage firm, there's a link under this weekly Forex forecast analysis. Right there, there is a link whereby you can start trading on a reliable, trusted, honest brokerage firm right from today. So thank you guys, and I do have a wonderful weekend ahead. Peace.